मेरे करोगे आगे से 1 महीने के पहले ना मैं तुम्हारे पास रहूंगी बस क्लाइंट वगैरह ये सब नहीं ये सारे हो गए 2-3 महीने नहीं मैं पेटीएम करके
Dear participants, welcome you all. We will be starting our session within 5 minutes. Good morning, everyone. A very warm welcome to the monthly colloquium on indirect taxes organized by VILGST. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified CA, qualified LLM, and LLB. He is the chairperson of the Indirect Tax Core Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCC and I. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now we request our speaker, Mr. Vivek sir, to take our session forward.
Thank you, Mushmi. Am I audible?
Yes, sir, you're audible.
Okay. I'll share my screen. Is the screen visible, Mushmi?
Yes, sir. It is visible.
Okay.
Okay.
So, good morning, everybody, and thank you for joining on this Saturday. Uh, Thank you to VILGST for joining hands with us for this 14th Indirect Tax Colloquium. Almost every month for more than 1 year, we are having this colloquium. But this time, Samir from VILGST, he could not join on the webinar because of certain medical issues. So thank you, Samir, in absentia for helping us organize this indirect tax colloquium with VILGST. Friends, we'll cover various topics today. You have seen that there are many topics which are listed down in the agenda today, and we will cover all of them during the course of this presentation. Also, as always, it is better on a webinar to join as a participants rather than YouTube live, etc., so that you can always ask your questions. And please do also keep on typing your questions in the chat box during this webinar. We will answer all of them at the end of the webinar or during the webinar itself. Do not keep it till the end, otherwise generally one forgets during the flow of the webinar. Friends, before we start, even on the agenda items, just 2-3 things. Very recently, we had a workshop, and from the Ministry of Finance, CBIC member was there during the workshop, and she listed down certain few points, and she was very uh, kind enough to give a very long presentation to us. Generally, we see from the ministry when officials are there, they are not very elaborate in their presentations, but the Honorable CBIC member, she was very elaborate, and the expectations she listed down, as well as the questions. She had many queries as to what is happening in trade. So this shows that the Ministry of Finance, also CBIC, they are wanting to be in touch with trade and industry. They are willing to hear your problems, and they are willing to sort it out rather than keep it to the litigation stage. She made 2-3 points during the webinar. First is just GSTR 3B compliance, that is quite high now as compared to previously where it was 60-70%. Now the GST compliance, 3B compliance is around 90%. And even in the B towns and the smaller towns in India, the compliance is quite high for GSTR 1 and GSTR 3B filing. So that is something which is very good. Just a second. Yeah. However, the honorable member, she said two very, very important things which are worth noting. First is that GSTR 3B, which is in the public domain for comments, that would be implemented very soon. Therefore, this GSTR 3B, which would be coming up, that would be very, very elaborate and that may require many additional details. You have also already seen. Okay, Mr. Prashant is saying not audible. Moshmi, am I audible?
Yeah, sir, you are audible and it's clear.
Okay, then maybe participants are requested to check the internet connection at their end. Possibly there might be a problem there. Now, yeah, now audible. Great. So, ensuing GSTR 3B, also GSTR 1, that would be much, much more elaborate than what we are seeing presently. We would be required to give much more details, and the reason is very, very clear that the Ministry of Finance, CBIC, they want that maximum of the answers which today they are getting in terms after issuing the notices and the SSE's replying, that they want from data analytics. So data analytics generated notices would be the way forward in GST, right? As of now also you are seeing data analytical notices under GST. You have started witnessing there are various notices on the basis of the GSTR 9 and 9C which you are filing or have filed already. These notices linking GSTR 9, what you have submitted in GSTR 9 vis-a-vis what you have submitted and reported in GSTR 1, GSTR 3B and 9C, of course. All of this correlated would throw up more and more notices going forward. So we as taxpayers who are working in our companies or we as consultants who are working for clients, taxpayers, we need to be very, very careful while filing the GSTR 1, GSTR 3B, and now GSTR 9 and 9C. When we are filing for 31st of December 2022, we need to be careful as to what we are reporting and how we are reporting. We already have various videos very recently, 2-3 days back. We have a video on our YouTube channel on some issues in GSTR 9 and 9C and how you should deal with them. We will discuss threadbare now more issues while filing GSTR 9 and 9C and how you can file the GSTR 9 and 9C correctly and in a way so that you are not caught up in a web of data analytics and unnecessarily are subject to scrutinies and notices under GST. So on your screen, you can see a notice in the matter of GSTR 9. This is an auto-generated notice on what the taxpayer has submitted in GSTR 9. We have summed it up on the basis of the tables of GSTR 9, right? So we will discuss this. This is relating to the tax liability on the basis of input tax credit eligible and availed and utilized as reported in GSTR 9. Now there are many tables. We will not go into all of them. We will just take up four critical issues over here. And as always, as every year, you are seeing the most critical issue is the table 8 capital D. 8D of GSTR 9. Friends, we have discussed this over the last 1 or 2 years. We are discussing this even today. We will discuss with an example that if your table 8D, what you see on your screen, serial number 6, if this is negative, then the data analytics of the GST department that might throw up irregularity and you might be receiving a notice. As you can see, it is said ITC to be recovered on account of excess claim over 2A. Only if it is in the negative, it will add it to your output tax liability, right? Or the tax recoverable. So let us discuss this. This is a very, very important thing. And this includes by and large an analysis of what is available in your GSTR 2A or for 3 months, that is 1st January 2022 to 31st March 2022 in your GSTR 2B vis-a-vis what you have claimed in the GSTR 3B. So table 8A, that is auto-populated from GSTR 2A, right? We all know this. Whatever is reflected in GSTR 2A of financial year 21-22, that will be populated in table 8A of GSTR 9. 8B will be populated from 6B. That is, whatever ITC you have claimed in all other ITC. Now there is no transitional credit, so we will not discuss about 6H, but yes, to the extent of 6B, all other ITC, whatever you have claimed in 4A5 of GSTR 3B during the financial year 21-22, all other ITC, that will be populated in 8B along with whatever ITC you have reclaimed after reversal due to payment to the supplier after 180 days. So 8B, 6B plus 6H, that will auto-populate in 8B. 8C is very, very important. Whatever ITC of 21-22, which you have claimed in April to 30th of November 2022, right? That will you have to manually insert in table 8C. The voice is not clear. I think kindly check the internet connection at your end. Mostly you will tell me in case there is a disturbance somewhere, right?
Okay, sir. Okay.
Yeah. Right. So participants are requested to check at the internet connectivity at their end, because here we have the voice very clear and loud, as I can understand from my team. So let us continue. 8C, that you have to fill in manually as to what is the ITC of financial year 21-22, which you have taken from April to November 2022. Right? 8A means the ITC reflected in 2A minus 8B, that is all other ITC and reclaim of ITC, minus ITC, which you have claimed in April to November 30th, which was regarding or relating to financial year 21-22, that reflects in 8C. So 8A minus 8B minus 8C, that will give you 8D. Now, if what you have availed in 8B and 8C is more than whatever is reflected in your 2A, your 8D will become negative. Correct? And if your 8D is negative, therefore you might get a auto-generated notice. Of course, you can explain. The question is, how do you prevent an auto-generated notice? By filing the GSTR 9 in a correct way. Let us take two examples, which all of you might be facing. First and foremost, on 31st of March 21, right? That is the last day of the last financial year 2021, right? On 31st of March 2021, there was a stock in transit, right? But you received the material on 1st of April 2021. Therefore, this ITC for stock in transit you are claiming when? April 2021, which will reflect in your 3B of 21-22, that is the for which you are filing the GSTR 9, but it will reflect in your 2A of 2021, last year's 2A, right? Which you have not claimed last year, but you are claiming this year. So in this year, what you will see is your 8A will not reflect this ITC auto-populated from 2A, but you have taken it and 8B will reflect this value. And therefore, 8B, assuming this is the only transaction, this will 8B will become negative, and that might lead to a auto-generated notice. So, friends, our suggestion in this issue is follow these from 8B, right? And also 6B, follow these transactions and report it in 6M. Correct? So it is very, very important. Yeah. Here, I am repeating again. Say, for example, you had a stock in transit, because this is very, very important, right? You had a stock in transit on 31st of March 2021. You claimed the ITC of that stock in transit last year. You have claimed the ITC in April 2021. Your 8B will show that figure of ITC, but your 8A will not show that figure of ITC in this year, and therefore your 8D will become negative. Our suggestion is that you show this in the 6M table, right? So that your 8 B does not become negative. Now you will ask me a question that, right on your screen, I have said this question. You will ask me a question, sir, if I show this in 6M, then my 6B and 6M will show the same figure and there would be a double calculation. There would be a double addition. Well, you have to cull this out, even out of 6B. On your screen, you can see. Even from 6B, you take it out. From 8B, it will go out and you show it under 6M. Therefore, 6O will be equal to 6A. So table 6 will reconcile. 8A will be equal to 8B plus 8C and therefore 8B will not be negative. So both of these issues will be taken care of while doing this adjustment. Friends, similarly, for 2021, there might be certain transactions for which you have taken the credit in 21-22 till 30th of September 2021. Right? That again will show up in your 6A, right? But it is important you take these transactions out of 6B, but again reported in 6N. So everything 6B will show the correct ITC of this year. 8B will reconcile with 8A and 8B will not show negative. So two impacts I have told you, right? One is 2021 transactions which you are showing till 30th of September 2021, that you have to call out and put it in 6M. And second is from 8B. You need to cut out those transactions again out of 6B also, which are reported in the 2A of last year, like stock in transit, like maybe many service bills, and that you report it in 6M. Take it out of 8B, 6B, and report it in 6M. Print your table 6 and table 8 of GSTR 9. That will be taken care of. Another important issue which we have faced, especially in the month of January to March 2022, from the date when section 16(2)AA has been invoked. That is, you can take only that amount of ITC which is reflected in your GSTR 2A or 2B. What we have seen is many a times the bill of entries that is not reflected in GSTR 2B. Some of it is reflected in IceGate. You have to fetch it from IceGate into the GSTR 2B. However, some of the bill of entries are still not reflected in even IceGate itself. Our advice always is, since bill of entry is the duty paying document, due to this kind of technical glitch, you should not take the input tax credit. So our advice is, on the basis of bill of entries, you should always take the input tax credit and shoot a mail to the authorities that you have done this and there was a technical glitch. Even the ministry people, they say this, that in case you take some input tax credit or you take certain actions on the basis of law, which is not reflected in the GST portal, or there might be any procedural difficulties, always keep it on record. Please always keep it on mail so that during assessment, no coercive action or recovery action is taken against you. However, the issue is in GSTR 9, while filing that, you have to reconcile the IGST paid with the IGST availed on imports. Clear? So 8I, you have to disclose the IGST paid on imports. And 8G, you have to disclose the ITC taken on IGST paid on imports. Many of the taxpayers ask us a question, sir, when we do not have the ITC which is reflected on the GSTR 2B with respect to these imports, whether we should disclose it in 8I or not. Friends, please do disclose it in 8I. That is our view. On the basis of bill of entries and the customs challan on the basis of which you have deposited the IGST on imports, and ensure your 8I is equal to 8G, but reconcile this on your letterhead and put in a submission as an attachment to GSTR 9C. That this is why your 8I, what IGST you are saying that has been paid, it is not reflecting in the 2B because of certain technical glitch, and you have already submitted the matter to the CBIC wide mail dated so and so, or help desk by mail dated so and so. Clear? Another important issue is many a times during the last financial year, before this circular 170 came into force. Now, after 1st of August 2022, circular 170 has come in force, and you have to claim all the input tax credit and then show it as a reversal. You have to claim everything which is shown in 2B and then claim it as a reversal. In 4B1, permanent reversal, 4B2, temporary reversal. Right? Now, in the last financial year, many of us, what we have done is we have netted off the credit notes which we have received from our suppliers. Correct? So when we have claimed, say, for example, we have taken the supply of certain material from our supplier worth rupees 100 plus 18 rupees GST. There has been a post-sale discount and there is a GST credit note on the same for 10 rupees plus 1.8 rupees GST. So what we have done, the ITC of this transaction, we have taken it as net of 18 minus 1.8. We have taken 16.2 in table 4A of GSTR 3B. And we have not shown 18 ITC taken in 4A minus 1.8 shown in reversal in 4B1. Friends, now in table number 7, that will should reconcile with your table 4B1 plus 4B2 of GSTR 3B. In 4B1 plus 4B2, you have not shown any reversal. But in table 7, if you show this reversal while filing the GSTR 9, of course, it is one way of presenting GSTR 9. Your 4B1 plus 4B2 cumulatively will not match with table 7 of GSTR 9, and therefore it might lead to a system driven query. Therefore, again, it is our view that one way of showing this is whatever way you have shown it in GSTR 3B, please take the same stand while filing GSTR 9. Do not show it in table 7, but show it as a net of figure in table 6, 6B or whatever table as per the nature of the transaction. Right? You can also give a submission in GSTR 9C with respect to this. Again, another practical issue, table 8E and 8F. Now, whatever ITC is available in 2A, you only take the ITC which is eligible. Some of the ITC is eligible but not availed because it will be availed in the next year, like stock in transit. Some of the ITC is available but ineligible, like food, like rent a car credit, right? In 8E, you have to show the ITC which is eligible but not available, like stock in transit. In 8X, you have to show ITC which is ineligible. So 8X is fine, you show ITC which is ineligible out of the 2A. But 8E, the moment you show it as ITC eligible but not aware in 8E, it will automatically auto-populate that figure in table 8A. And table 8K says ITC lapsed, right? So the moment you disclose anything in 8E, that will automatically reflect in 8K as ITC lapsed, right? Therefore, again, one way is to let it be lapsed. And in case you get a notice, you have to disclose this before the department. The other way, of course, is that you put a submission as an attachment in GSTR 9C that yes, this is not lapsed actually, but it will be taken in the next year. The other way is to leave 8E as 8F blank. If required as a matter of abundant precaution, you can disclose it as a submission in GSTR 9C. Okay? The moment you show it under 8E and it goes under 8K as ITC lapse, during assessment, some of the officers might be questioning you. It may not lead to an auto-generated notice, but during assessment, some of the officers may not understand and may question you, and you might be at pains to explain to them that, gentlemen, this is not ITC which is lapsed, but this is due to the way the GSTR 9 is formulated, that it is reflecting in ITC which is lapsed. Now, again, another important change in GSTR 9C, table 9K1. 9K1 in GSTR 9C, that is a new table which has been added to GSTR 9C for disclosing the rate of output supply and as any other special rate. What can be these rates? Like for implementation of GST solar panel. I think many times some participants are saying voice is not clear, but my team is saying that the voice is clear. Still, I will switch off the video for some time to see. I'll switch off the video for some time to see whether you get the voice clear at your end or not. Yeah. So the installation of solar panels, as we all know, that from 1st of January 2019, for implementation of solar panels, the rate is 70% of the value of supply should be shown as sale of goods at 5% and 30% should be shown as sale of services at 18%. So it gives a composite rate of 8.9%, right? This kind of special rate should go in table 9K1 of GSTR 9C, right? So this is a new table, and in case you have this kind of special rates, you must use the table 9K1. Friends, now on your screen, you have another extract from a notice on the basis of GSTR 9 in one of the states in India. One of the SGST departments of one of the states in India, they have sent this kind of a notice for a personal hearing for GSTR 9 discrepancies. They have asked the taxpayers that, gentlemen, we are giving you sample transactions where there can be a difference between GSTR 1, 9, etc., etc. You please see whether there is any such difference, and before coming, you please fill up this notice. You reply to this notice before coming for a personal hearing. While in case you find that there is no such difference, what we have done for our clients is that we have replied to them that, sir, we do not find any difference. However, if you have any point of difference, please let us know so that we can reconcile. However, we have shared this with all of you over here because see, in the way how the department is analyzing GSTR 9 and your GST data. And this is how you should prepare your company or your clients so that you can be assessment ready under GST. And friends, the biggest going forward litigation would be on e-way bills, not matching with GSTR 1 and GSTR 3. You can see a host of transactions. They have said, they have given themselves that, okay, if there is any difference of taxable supply between your GSTR 1 and GSTR 9, it can be due to various reasons as highlighted. Now, I will just go to reason number C, one of the reasons. Now, this is a mistake which many of the taxpayers are doing. Even if there is a intra-state movement of goods between their one branch to another branch through delivery challans, they assign taxable value of taxable supply and the tax rate and tax amount. Friends, you go to Rule 55 in case there is a delivery without a corresponding supply, like the intrastate movement of goods between one branch of a company to another branch, there is no requirement to show the tax rate and tax amount in the delivery challan. Many of the taxpayers are doing this mistake, and therefore you get a auto-generated notice after reconciling your e-way bill data with GSTR 1 and GSTR 9, because e-way bill shows a higher tax amount and your GSTR 9 and GSTR 1 shows a lower tax amount. So there can be various other issues between GST e-way bill data, GSTR 9 and GSTR 1 data. Therefore, it is pertinent that you reconcile 1, 9 and e-way bill data so as to be ready for assessment. Right on your screen, there are many other transactions, right, which can lead to a notice and which you have to reconcile the e-way bill with 1 and 9 data. So there are various, this is a long notice, right? I will share this PPT with you. You can go through all of this, but they have shown various transaction excess claim of ITC over GSTR 9. We have discussed this in detail initially, that in case of ITC, there is any unreconciled 8D is negative, A, 6O is greater than 6A. All of this will lead to a notice under GST. So GSTR 1, GSTR 9 difference, right? Exempt supply. The moment you show anything in exempt supply in table number 5 of GSTR 9, that very moment you have to be careful, and in case there is a proportionate reversal, you have to reverse that ITC and show it in 7. If your table number 5 shows an exempt supply, right? And table number 7, it does not have any proportionate reversal under rule section 42 and 43, then immediately you will get a show cause notice, right? So you have to be careful. But again, interest on fixed deposit, interest on current account, etc., that is an exempt supply, but will not be considered for the purpose of ITC reversal. Therefore, to that extent, you should not show a ITC reversal under section 42 or 43, which please note. Again, as a matter of precaution, you can give a submission in the GSTR 9 as an attachment, right? Ineligible ITC, again, there are various other notices, right? The various other issues in that notice which has been highlighted, you can go through this at your own pace at home when PPT is shared. Various other critical burning issues which you should be careful about. Bill to ship to cases. Well, many of the times I have discussed this in various other forums. Have not been in those forums. Bill to ship to cases, I will give it an example. I will discuss. Say, for example, you are located in Maharashtra. You are manufacturer of say steel, right? You are located in Maharashtra. Your supplier is located in West Bengal, but his supplier is located in Tamil Nadu, Chennai, right? So the supplier material comes from directly from Chennai, right to Maharashtra. Material moves from Chennai to Bombay in Maharashtra. But the order is placed on Kolkata, West Bengal, right? So what invoice Kolkata, West Bengal will raise on the supplier in Maharashtra? He will raise invoice or bill to Maharashtra dispatch from Chennai, right? The Chennai party, from where the movement is there, he will issue an invoice on West Bengal as bill to West Bengal, shipped to Maharashtra. The e-way bill will be made on any one of these two invoices. The allegation of the department when they are scrutinizing or sometimes even inspecting the premises of the manufacturer in Maharashtra is that this supply is a fake supply. Generally, when the supplier in Chennai does any irregularity in payment of tax to the government, they will allege that see, this supply is a fake supply from Chennai, right? And the Chennai party has defaulted in payment of tax to the government. Therefore, you as a beneficiary, you as the manufacturer who is the beneficiary of this metal scrap, you have to reverse the input tax credit under section and they invoke section 122 1 capital A. Friends, it is our submission that section 122 1 capital A, it talks about two things. You have to be the beneficiary. In our example, the manufacturer in Maharashtra, fine, it is the beneficiary of the transaction, but in addition to this, it has to be proved that he is also the mastermind of the transaction. If it cannot be proved that this guy in Maharashtra is the mastermind of the transaction, then there is no way in which he can be asked to reverse the ITC because the L2 supplier has done certain non-compliance in payment of tax to the government, right? Another burning issue, you see, there are various other issues which we have discussed on the various forums. We have also in this PPT, we have given our replies on those issues. You can go through this. We will discuss this point number 7. E-way bill not filed for inward supplies. Generally, what we do, we match our e-way bill data, if at all, with GSTR 1 and GSTR 9 outward supply data. However, we hardly match our e-way bill data with our inward supply data. Friends, let me tell you, there have been cases where this has been taken up by the department that in case an inward e-way bill is not there with you for ITC, then your claim for ITC or your refund of ITC, that can be challenged by the department. You see, I have one such case. Yeah, on your screen. Principal Commissioner CGST and Central Excise versus Bushra Export House. It is a 2-star export house in Lucknow, mind that, right? So finally, the order was in favor of the taxpayer. The issue was that there was an intrastate supply of goods where there was no e-way bill generated, and rightly so, but the ITC and the refund for the recipient was denied because there was no corresponding e-way bill for inward supply of goods. While this was held in the favor of the taxpayer, it was held because there was no requirement of generation of e-way bill for intrastate supply of goods. But it lays down the passage for litigation for future, and it lays down a fact that in case you do not have an inward supply e-way bill, then the ITC can always be challenged by the department. So not only important that e-way bill is reconciled with GSTR 1, GSTR 9 outward supply, but it is important to have e-way bills for inward supply also, right? Now, there are various other issues. Now, one more which we are contesting is I have taken the input tax credit. My supplier has also filed his GSTR 1 and GSTR 3B. He has filed his GSTR 1 and GSTR 3B after the time barring period, right? So, for example, let us understand you have taken the ITC of an inward supply in March 2021-22, but your supplier has filed his GSTR 1 and 3B with respect to this transaction only in December 2022. So the question is, can the ITC be denied by the department? Friends, you can see the judgment of advanced ruling in the case of Eastern Coalfields, Advanced Ruling Authority of West Bengal. They have held it negatively, but they have not contested this point that tax was not paid to the government. They have held it negatively against the taxpayer on the basis of Rule 36(4). But 16(2)(c) they have not specifically denied the benefit of 16(2)(c, that tax has not been paid. So our respectful submission in this is, even if the supplier has filed his GSTR 1 and GSTR 3B with respect to a transaction of March 22, since the tax has been paid and if all other conditions of availing ITC have been availed, you can avail the input tax credit in March 2022. No problem in that is our legal submission in this case. Right? Few other very, very important issues which will become the and which will pave the path of litigation in future is linking of credit notes and debit notes. Friends, you all know that from February 2019 on the GST portal, the requirement of linking the credit notes and debit notes with the original invoice, that has been done away with. The question is that section 15(3) of the GST Act still requires the linking of credit note with the original invoice. Therefore, even if the credit note is not linked with the original invoice on the GST portal, it is very, very important to have your internal document linking your credit note to your original invoice in case you want to issue a GST credit note and claim the reversal of output tax liability. Right? This will, I am repeating, this will come up for litigation going forward. Therefore, as consultants, as GST professionals handling GST work in your companies, please be aware of this provision and take corresponding action. Another important issue is cross-charge versus ISD distribution. Friends, many of the times, while it is our respectful submission, always it has been our legal submission that there is nothing like cross-charge under GST, right? This has been the imagination of some, you see, GST professionals somewhere, but there is nothing like cross charge embedded in the GST law. Therefore, we highly recommend that you should not go in for cross charge. You should always go in for ISD mechanism if you want to distribute the common input tax credit. However, if you even cross charge, the question is that just due to a procedural issue, for example, you hire an agency for marketing activities across your 25 states in the country. That marketing agency gives you one invoice in the state of Tamil Nadu. Question is whether you can take the ITC in the state of Tamil Nadu and cross charge it in all the states on the reasonable basis. Well, even though we are not advocating cross charge, but it is our legal submission that please go to the FAQ released by the CBIC in banking and finance sector. The CBIC itself has given an alternative of cross charge against ISD distribution. You can either go for ISD distribution or cross charge. That is held in the FAQ on banking and financial services by the CBIC. Next, very important issue. We will discuss this a little slowly. It will take 5 minutes time. Please listen to this carefully, friends. I am telling you, you can see our videos on the also on the YouTube, our YouTube channel, Tax Connects YouTube channel. This will become almost an immanageable litigation. It is already immanageable. We are representing before the Ministry of Finance in this regard also. Friends, in all the companies, in all the businesses, there are various kinds of discounts, right? Various kinds of discounts. Many of these are post-sale discount. Now, in case you have to charge GST, that is, in case you have to do a GST credit note for a post-sale discount, you have to satisfy 3 conditions. First condition, there should be a pre-sale agreement. Second condition, the invoices, the credit note should be linked to the original invoices. And third is the recipient should reverse the input tax credit. In case there is no pre-sale agreement, then you do not issue a GST credit note, you issue a financial or commercial credit note by whatever name called, right? This is a common trade practice, always also advocated by circular number 92, 2019, CGST. Friends, now say for example, you get a turnover discount, right? The agreement is that in case your principal, your original manufacturer, in case you are a trader, in case you are a manufacturer yourself, then you can understand from the point of view of the trader because it will impact your dealers and therefore it will impact you. So, and in my example, I will assume that you are a distributor. Now your principal will give you a scheme that, gentlemen, you achieve a turnover of 1 crore rupees in the month of December 2022, and if you achieve that, I will give you a 1 lakh rupees post-sale discount. You achieve that turnover on 1st of January 2023, your principal gives you a commercial credit note for December 22 sales. Because while there was a pre-sale agreement, but it was not crystallized at that point in time. There was not specific agreement, or it cannot be linked to the invoices, whatever. Now, friends, I will do linking. I will do interplay here. Please be very, very attentive here. This is very important. Now, this post-sale discount by passed on by means of a commercial credit note. As per the CBDT circular number 12, in the matter of 194 capital R, that requires the principal to deduct TDS at the rate of 10% under section 194R. On these commercial credit notes, friends, many of the principals have already started deducting the TDS also. In case you are the distributor, TDS has been deducted. Therefore, the GST department would always raise an issue that this is not a discount, this is a service of marketing which you as a distributor have rendered to your principal, and therefore you should have raised a service invoice on your principal, and they will initiate proceedings under GST law. This has happened across the country already. This, friends, will happen going forward. Therefore, we are representing this before both the CPDT as well as the CBIC. But in case you are a aggrieved party to this, please do raise this issue. We will represent to this through chambers of commerce, right? Various chambers of commerce and trade bodies. Please do write to us and we will take up the case in case you have any other issue in this regard. But friends, this would become a very, very critical issue, both in GST and TDS. Why in income tax TDS? Because now you as a main distributor, you are passing on the same commercial credit note to your sub-distributor. If you, now you are a big distributor, but say your sub-distributor is a small sub-distributor, he will say, Baba, 10% liquidity impact, working capital blockage, I will not take, I will not sell your material. Therefore, if you do not deduct TDS, you will be held to be SSE in default, so you will have a double whammy. One, you will require to pay GST on this as a service to the GST department. On the other hand, the income tax department will come before you and say that you are an SSE in default. Please pay the TDS, interest and penalty also on this transaction. This is a very, very important issue. And there is a very important requirement to do an interplay between TDS under 194R, Section 28, Clause 4 of Income Tax Act and the GST law in India. Both all have to be read synchronously, otherwise it will become a big problem going forward. Right? Again, another issue is many a times your input tax credit is denied as a recipient because your supplier has defaulted in payment of GST to the department. Friends, I have dealt with such a case myself. What I asked, and I'm suggesting the same to you all, you might cite BY Bethel Enterprises Madras High Court. You might cite various other case laws. But you also have to provide corroborative evidences. Friends, I will say what we did, and you can also replicate this in case you deem it fit. What we did, we asked the taxpayer, that gentleman, do you know this supplier? He said, yes. Is he in existence? He said, yes. I said, go from far, take a photo of the factory. which is still running, or the warehouse, which is still running of the supplier. We took the photos from far by zooming in, and we submitted the photos to the GST department, the adjudicating authorities in that case, audit authorities. And we contested that, gentlemen, this supplier is in existence. He was registered, even though now this GST number may have been cancelled. But please do the recovery from the supplier. If he is in existence, do not come to me directly. However, this photo as an incrementing evidence, this is very, very important. Therefore, friends, we suggest that you build up evidences, you build up a case, and thereafter cite a case law that is more powerful as a defense rather than just going with case laws. Now again, interplay, right, between income tax and GST. Right, you have to see law as a whole. Now that income tax and GST both are so interlinked, your decision in one case can lead to a issue in another case. Many of the times, there is GST inspection or investigation or search in your warehouse or your factories, and they find out a stock difference. Many of the times you do not agree between the stock difference. In one of our cases, in one of our taxpayers, the same material was kept on the first floor of the warehouse and the same material was kept on the second floor of the warehouse. Now the GST department investigating agencies who came, they counted both the materials separately. In one they found a shortage, in one they found an excess. They reported both as liable to GST. Friends, we did not advise and our taxpayers did not admit this, and we went for appeal. But there were other similar taxpayers who admitted this liability and paid the amount under protest to buy peace. Friends, the CBDT has brought on that same issue today. The gentleman dare, if you have admitted, or even if you have paid a tax under protest, admitting or not admitting a shortfall in the inventory, then here under income tax also please pay the income tax on this amount. So this is a very, very important thing. In case you do not agree, again, I would always say go to the authorities with evidences, go to the authorities with specific arguments. Then you get a good case for yourself and you give the authorities also an opportunity to pass a favorable order for you. So what we suggest in these kind of cases is that you get a stock audit done by an independent chartered accountant or a cost accountant or a CS or some independent agency. And you take that and then go to the department, and if you have to buy peace for yourself, buy it under protest. Pay the duty under protest. Only then you can contest it also under income tax. However, if you even want to buy peace in income tax, then at least it has been held in various cases like CIT versus Submit Synthetics, Gujarat High Court, and various other cases like Guru Bachan Singh, J. Juneja, Gujarat High Court, Bombay High Court in the case of Hariram Bambani. But in income tax, even this is brought up, then only the profit, the gross profit of this shortage of stock, that would be liable to income tax. But the payment of interest and penalty would not be allowed as a deduction, which please note. So be careful in these kind of cases when you take a decision in one law, that you have to be careful about the impact it can have on the other law. Impact of 194R on GST, we have already discussed. Some developments in customs before we come to the queries. Well, in the case of Crompton Greaves, it was held that just because a printed circuit board has been embedded in a LED lamp, then the import of this printed circuit board cannot be classified as an LED lamp, right? A printed circuit board will be a printed circuit board, LED lamp will be an LED lamp. Only because the printed circuit board would be required to be combined with the LED lamp going forward in a process of manufacturing, while importing this printed circuit board cannot be classified as an LED lamp. This is a very, very important judgment by the CESTAT Mumbai. Many of the times, many of the customs authorities across the country, they take this kind of a stance. So you can cite this judgment by the Mumbai Tribunal in the case of Crompton Greaves. Validity of e-scripts, the ROTTEP scripts, that has been increased to 2 years than 1 year. So if you have ROTTEP scripts, right, ROTTEP scripts came into effect from 1st of January 2021. So still 2 years are left. Please go through your ROTTEP scripts online, and in case you find that they are unutilized still, if they have been issued on 1st January 2021, the last date of utilizing it will be 31st of December 2022. So if you have not utilized it, it is better to sell it off before 31st of December. So various other issues under GST is, again, many of the authorities, they are not issuing pre-show cause notices. They are issuing directly orders under GST 1 without giving you a show cause notice, or they issue you a show cause notice without giving you a personal hearing. They issue an order. In Jharkhand, we had a taxpayer where order was issued immediately after show cause. Personal hearing was not provided. Well, the state of Jharkhand, in the case, the High Court of Jharkhand, in the case of Om Sai Ram Enterprise, that is held, that directly after show cause, that cannot be an order. The authorities have to take the reply of the show cause in cognizance. They have to give a personal hearing. Only after that an order can be passed. Just after the show cause, a direct order cannot be passed. Friends, in case you have a risky exporters issue, right? We all know that in case of many exporters, the DGARM had tagged them as risky exporters, and all their GST refunds were denied. The MEIS ROTTEP licenses were put on hold. 100% of their shipments were opened up at the ports. Right? And so many other benefits like drawback and all are denied to risky exporters, those who are tagged as risky exporters. Well, instruction number 4 has been issued. Now the risky exporters become more risky. Right. I will repeat. Risky exporters become more risky. Why? Because on the one hand, the CBIC has given a relaxation. Okay, in case for the risky export, those taxpayers who are tagged as risky exporters, if their GST refunds are due, then they will be automatically transmitted to the jurisdictional proper officer. Now, in instruction 4, they have said that his jurisdictional proper officer, he has to ascertain the genuineness of this risky exporter, correctness of the ITC, and then give the refund. And in case he provides the refund, he has to give an explanation online as to why he thinks that the risky exporter's tag should be untagged or should remain tagged. Friends, let me tell you, I would, and this would be closely monitored by the Chief Commissioner. Let me tell you, there is very little chance that any jurisdictional proper officer will take it on himself, especially in GST, to pass an order of refund and say that the risky exporters tax should be removed for the exporters. So DGARF has shifted all its burden on the jurisdictional proper officer. This would make it even difficult for the risky exporters, and we feel that all risky exporters cases, they were always set aside in high courts, and that trend might continue after this instruction 4. Section 161, we all know, those who are practicing income tax over here, we all take shelter under 154, rectification of errors apparent from record. You can take that same shelter and an online procedure. Many of us do not know this. In case you get a wrong order, you get a calculation mistake which is evident on the face of the record, right? The tax paid by you, the ITC available in 2B is not considered in the order. Then online you can apply for rectification of that order under section 161, just like you do it in income tax under 154. And but the timeline for 154 is 4 years. Here the timeline is only 3 months. So you can take the benefit of this facility of rectification of errors apparent from record in GST also. So friends, I think we have discussed over here whatever there was there more or less in our agenda today. We'll share this PPT with you, with all the participants. So please, I'm sure that you have all shared your email IDs with our team. They will share the PPT with you. We will take up various questions in the chat box. Mr. S. Sarvanan says, to my understanding, GSTR 9 table 6 with respect to ITC is gross basis corresponding to reversal in table 7, whereas table 8, it is only on net basis resulting in negative 8D. A matter of concern, as no supporting through PDF attachment is not available for non 9C cases. Your suggestion on the above. Okay. So, yeah, if this 8 is gross basis on the basis of table 6, the impact of reversals is not there. Therefore, again, we would suggest that you take the net figure in 8D so that the 8A is compared apple to apple, because 8A would only include table 3 and 5 of GSTR 2A. So it would not compare apple to apple. Therefore, please take the net figure in 8B, right? Also, yeah, although the 8B, again, it has to be tagged to 6B. So to that extent, you can take the net figure, or in case it is a non-9C case, it is important, I would say, that you can file a offline submission to your range office that this is the stand you have taken, or this is why your 8D is negative, right? You can also file an email to your jurisdiction officer in this regard. Similarly, table 7 is for the year, whereas 7H to incur both reversals made during 21, 22 and April to October 2021, 22 April to October 22. Why? I think you can net it off in 8C. This reversals, you can net it off in 8C also. Mr. Navneet said point raised is the same issue we are facing. Yeah. With respect to spillover of 2021 in 21-22, both with respect to outward supply and ITC available and reversals. Okay. Mr. Bharat says, what if excess ITC claim? What if any excess ITC claim already reversed? So you can show it under other reversals in table 7. show the ITC which you have taken, that would automatically come in table 6, and whatever reversals you have, show it under 7H. You must have already shown it in table 4, B, 1 or 2. Mr. Amitava Lahiri says, but 16 to AA read with rule 36 speaks about invoice and debit note, silent on bill of entry. Absolutely. So, bill of entry ITC, you can take it, right, even without it reflecting in GSTR 2B. But the field officers are all still raising the issue that why, if it is not reflecting in 2B, then they are creating a issue on this. Therefore, as a matter of abundant precaution, you can always submit in GSTR 9C. Mr. Sandeep Kumar says, many times we pay customs duty for FOC material. Its input is not showing in 2A. We have claimed it, then what will happen to 9C? What value should be shown in extra claim, and if extra claim is shown, then what will be the reply? Mr. Sandeep, it is not an extra claim. You are utilizing this FOC material while rendering your output supply and as a furtherance to business. You have claimed it in GSTR 3B, it will reflect in your GSTR 9, and you can claim it in 9C also, right? You need not do anything in this regard. It is a righteous claim. Mr. Bharat says, please share FAQ regarding CBIC on cross charge as an alternative of ISD for banking and financial sector. You can see it's available on the public domain. We'll share it also. Mr. Rajesh says, company having residential and commercial project and residential project completed, but reversal of ITC pertaining to residential can be discharged through DRC 3 against credit of commercial project or to be paid in cash. If it is the same GSTIN, then always there is no requirement of bifurcating two projects. If it is the same GSTIN, of course, you can reverse it by ITC, which is available. Once you take the ITC for anything in a GSTIN, commercial project, residential project, it becomes a common pool. And thereafter, you can use it alternatively for reversal. Mr. Rakesh Jain says for 2021, we have shown XX exempted sale in balance sheet and 99C filed accordingly. In 21-22, we have reversed the aforesaid sale in 21-22 in financial. By mistake, we did not take the effect in 1 and 3 for 21-22. Now, which table of GSTR 9, the aforesaid reversal sale has to be shown? So you have reversed it, as you must have done the reversal by either means of a credit note or by means of a amendment in GSTR 9 in table number GSTR 1 table number 9. So accordingly, if you have shown it as a reversal as a credit note, please show it there. If you have shown it as a reversal in table number 9, there is a column in GSTR 9 for that. If you have shown it as a DRC 3 reversal, then you show it under 7, table number 7 as a reversal. Mr. Suresh says, if any outward liability missed in GSTR 1, can we show it in GSTR 9 and possible to set it off against ITC? Well, yes, you can show it under GSTR 9, but GSTR 9 liability, you must pay it off in cash and not as a reversal of ITC. However, this is only through a press release which the CBSE said this, so you can contest it in the courts, but I am sure that the Officers will take a stand that in GSTR 9 you have to pay it in cash and not as amendment or adjustment to ITC. Mr. Ashish Singh says, why is there no option in e-invoice for supply to unregistered person? We need to manually put in the data while filling GSTR 1. Mr. Ashish, there are many people, there are many trade sectors who didn't want this. They are thankful that there is no invoice for B2C supplies. So, where there are various demands of various sectors. Mr. Navneet says amendment done in outward supply B2C, B2B of 21-22 in financial year 22-23 before 30th 9/22, where to show it in GSTR 9 amendment. Again, you must have shown it under table number 9 of GSTR 1. Therefore, you have to show it in table number 10, right, of GSTR 9. You can see table number 10 or 11, right, of GSTR 9. There you can disclose this. Ms. Swagata Das is wrongly paid advance tax against PAN number and major head and rectify the same. Also, assessment received against correct PAN. Now can we rectify the same? I think Ms. Swagata, uh, this is related to income tax. Your question, you are saying you have already got the PAN number rectified, right? So during assessment, you can produce the challan for rectified or the order of rectification. And I think the matter should be taken up accordingly, or you can do a 154 also in this case. Rajesh, Mr. Rajesh Shirshad says TDR used for commercial project where all amount paid in cash, but client reported under residential officer asking taxes with interest since used for commercial project. So we can pay when commercial project completed since all amount of TDR received in cash. I don't think so. I'm not sure whether it is as per any law or not. You can ask the officer the reference of the law, but the moment you show it as input tax credit, you can set it off. That is the law. Mr. Rakesh Jain says, can you please repeat in which table of GSTR 9 we have to show the reversal of exempted sale? So, exempted sale, you have shown it in table number 9, right? Now, you have reported a exempted sale wrongly in your GSTR 1. You show it in table number 5 of GSTR 9. And therefore, if you have to rectify any of this, you have to do it in table number 10 and 11 of GSTR 9. So, we are exactly on time. Thank you very much to all the participants for joining this webinar, and we will see you in January 2023 in the new year for our 15th Indirect Tax Colloquium. Thank you very much. Till that time, over to Moshmi.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinars every month and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you.